Should we pay attention to the boredom or should we ignore it? Hey everyone, welcome back to Upside Down Data. Today I want to talk about sentiment in market cycles. And so with Bitcoin right now, as we trade up at about 30K here, we have been in a point where the market has been up quite substantially off the lows. Obviously the lows here down at 15K were substantially up above that right now. But even despite that, I think there's a lot of boredom in the market. That even with price rebounding as it has, a lot of people think that this is just an extension of the bear market and that price action that we saw in 2022 is just going to resume in a matter of time. A recession is going to hit, send us down to new lows. Some new SEC news is going to send us down, etc. There are a lot of people who still kind of have one foot out the door, kind of thinking that this is not sustainable. We're going to kind of fall off a cliff. And frankly, then a lot of people are just getting bored and just saying, we're going to chop around. We might have some movements up, then we'll have some movements down, but nothing super exciting. We're not going to be having this kind of rapid movement anytime soon that we see in a bull market. And we're not going to have altcoins popping off left and right like in these bull markets, which tends to be the more exciting time. And really kind of the best case scenario we can hope for. So here I'm showing you the Bitcoin dominance chart. We're seeing right now that Bitcoin dominance is just going on an absolute tear to the upside. So I think a lot of people think is that even if we're not going back down to the bear market lows, even if we're going to be able to, slowly move up, it's just going to be a point where it's really going to be a Bitcoin only show, maybe Bitcoin and Ethereum, maybe a few other particular assets. But in general, not really anything too exciting. Just one asset leading the way, in this case, potentially Bitcoin, and really nothing all that exciting happening in the meantime. And so those who already feel like they've filled up their bags for the bear market and are just going to be waiting to see what happens next, or those who are still looking to be acquiring assets might just be buying Bitcoin, maybe Ethereum, but nothing super exciting. It's kind of boring, maybe just dollar cost averaging in, but not that kind of excitement you get in a bull market when things are going crazy and you're kind of making a lot of decisions in a short amount of time as prices pop and dump really rapidly for different altcoins and things like that. So what I wanted to talk about in this video was how sentiment tends to go through these cycles in the market cycle. And really when you think about the market cycle here, I'm just showing you the market cycle starting from 2013 into 2017, and then the one that ended in 21, and then the one that we're in right now, is that you get these kind of clear different phases of a cycle, and the sentiment tends to follow a predictable behavior or pattern through it. You get into these bear markets where kind of early on in them, you have a lot of disbelief that you're in a bear market. People think, well, the bull market's going to come around again, just wait. And so a lot of people are still then trying to catch falling knives with altcoins, thinking that they're just going to go explode back to the upside. Certainly that happened a lot in this last bear market here in 2022. But as you get through there, then there's a lot of just kind of realization that we're in a bear market and kind of despair that happens, but people are still generally paying attention because things still are happening. They're just not things that people would generally want to have happen. Although certainly anyone playing the short side of the market is really happy through this phase because you're getting these really big sell-offs that could be potentially quite lucrative for those playing that, and certainly are eye-catching to anyone who's invested and is holding through these massive drawdowns. But then what happens next is what I think is kind of the most interesting phase of the market, is this kind of boredom phase. So you have the bear phase, then this is what I'm terming the boredom phase. So I should say off the cuff here, where I've classified this is relatively arbitrary. I'm not saying this is an exact science of when I've marked the beginning and the end of this, but generally the idea is that in the middle of the cycle, there's this phase where price is done dumping. It's done, the dumping it's going to do for the bear market. But then it's just not doing anything that's especially exciting. It might move up, move down, move up, move down. In 2019, we had a pretty big move up, but then we kind of bled back down. And generally speaking, it's just not going to be all that exciting. And they're not going to be a bunch of altcoins participating. It's largely just going to be Bitcoin doing something. And a lot of people just kind of check out. They're really not all that interested. We're not getting all that close to all-time high. People just aren't really paying attention. Then eventually you get into that exciting phase, that bull market where things really start taking off, and then where a lot of altcoins start joining the party, and that's when all the excitement and exuberance happens, and that's when you get all these people who had been tuned out, had been totally ignoring crypto through here, or a lot of the bear market as well, kind of FOMO in, either people who've already had some exposure to crypto, or just totally new people who are kind of getting in at the first time, that happens during this phase here. Everything's exciting, and then it all kind of repeats again. And the reason why I said that this yellow zone, this boredom zone, is the most interesting in my opinion, is that when you just look at it, historically speaking, this has been the best time to be acquiring Bitcoin every single time, especially early on. You get into this kind of boredom phase early on and are buying into Bitcoin, even if you're not early on, even if you buy a little bit later, that's when you're setting yourself up to get the max return in the bull market. You know, if you wait until Bitcoin's already cleared its all-time high, there's still going to be some room to the upside. We've already missed a massive chunk of the move. And so really it's people who are buying in this phase who tend to be set up the best for whenever the next bull market comes around. And this isn't just for Bitcoin. You know, obviously when we look for Bitcoin, we can see that people who bought at these times did very well going into the next cycle. It's also for altcoins. So just to give an example, this is ADA, an asset that did quite well in the previous market cycle. This yellow is the same, this is the same time period that I had shown for Bitcoin during this cycle right here. See that ADA didn't really do anything all that amazing during this time. It had some move to the upside and then it's kind of bled back down. You know, not actually too dissimilar to what happened here. Some move to the upside, went back down, actually setting a new low over here. But then when we got into the bull market, just look what happened. ADA exploded 15,000% to the upside in that time. And so that's where I'm saying, you know, anyone who is buying ADA during this time down here really benefited during this phase of the cycle up here. You know, really anyone who would have waited for example, Bitcoin to clear its all-time high, you know, all the way over here in December, they had waited that long, they would have missed, you know, look at how much higher ADA was at that point relative to back down just through this phase through here. So basically DCAing all the way through here and then selling out here would have done way better than FOMOing in, you know, somewhere about mid-move and then, you know, trying to deal with things later. And so that's where in these, you know, phases of the market cycle, these feel the most boring. These accumulation zones, which, you know, I'm claiming that we're in one right now. Time will obviously tell, but I think so far things are looking a lot like we're in that phase of the cycle right now. It feels boring. It looks boring. You know, there's not really a whole lot happening, but the people who stick it out through that time, people who you know, acquire during that time tend to do the best in the next bull market. Now, obviously this is not financial advice. And, you know, obviously there are extrinsic risks that anyone has to keep in mind of, you know, if we do get some massive recession, does that change the nature of how things might play out in the future? But if historical patterns continue to repeat, and so far they have, then anyone who's able to stick out the boredom might be quite likely to be rewarded. And that might go for not just Bitcoin, potentially for altcoins also. So what I've also done here is shown kind of the average. So this one was a little over a year. So obviously a year being 52 weeks. On the weekly chart here, this was 65 weeks. This was 69 weeks. Here I'm showing you 67 weeks as just kind of being the middle point between those two historical parallels. So if that's at all accurate, or if that plays out at all like it did in the past, where we might have to wait about that long, then it would suggest we're about half of the way through the boring phase. So we still have a ways to go. And obviously that's a little bit, you know, that's very much with a grain of salt. Who knows if this one could go shorter or longer. But the idea is that we might still have a ways to go in this boring phase. But as I've just been saying, even though it feels boring, it's actually the most exciting phase of the market in some ways. That this is the phase, historically speaking, where people build the positions that then give them that capital to really play with in the bull market. That you build up these positions so that when Bitcoin explodes or when some altcoin explodes, you then have money to move out of those assets and potentially into other assets that haven't run yet, so on and so forth, rinse and repeat, to really compound profits and make quite a lot of money. And then, of course, being able to identify when the music has run out and exit. So obviously at our website, poeticdigital.io, we have a variety of different models that can act as quite useful guides for identifying those things. You know, what phase of the market cycle are we? Are we near the market cycle top? One model that I like to look at in this kind of context we've just been talking about is our momentum bias indicator. So this indicator is basically looking at the momentum in the market, and is it really biased to the upside or biased to the downside? So positive values mean upside bias, negative values mean downside bias in terms of momentum. And I've talked about this before. There are very distinct behaviors that the MBI will have at different phases of the market cycle. In a bear market, it tends to spend most of its time in the red, setting in new lows, which each bottom, and then only briefly trying to reestablish positive momentum before getting rejected to the downside. But then you move into this phase where things start kind of oscillating around zero more closely, and then especially you get this kind of big breath of new life at some point, this big pop above zero coming out of the bear market that can signal the early stages of that reversal point of when the new bull market might be forming. So for example, here, we had this sideways chop for a while, which I classify as being part of the boredom phase. Then we really got this breath of life here in late 2015 that then kicked off the next bull market. And then going into the bull market, you spend a lot more time in positive momentum bias than negative territory before you go have some blow off top in momentum bias. Same thing then happened in this cycle, where here we got this much more extended breath of new life here in 2019 before cooling off a bit, and then off we went to the races again. And now when we look at what's going on with the market, we see we're in that bear market, a lot of time in the red, and now we're starting to see that breath of new life right over here at around 18Ks when this popped up like that. So far, so good. So again, that could still mean that we have some time in the boring phase left. But so far, this model is starting to behave a lot more like early stage bull markets, or kind of that boring phase that then precedes the more exciting phase of a bull market over here than it does a bear market. And so that's another reason why I think it's reasonable to hypothesize that we might be in this boredom phase of the market right now. And again, it's one of those things where the people who stick around for those phases, historically speaking, have been the ones most rewarded. And partly that's because the people who stick around are doing the opposite of what their emotions tell them to do. We talk about this a lot, how emotions are usually a terrible guide for investing. When your emotions tell you to be bored, to not care, to not watch, oftentimes that's the time to be caring the most and watching the most. When things are getting really exuberant and when you want to be paying a ton of attention, that's actually maybe a sign that things are getting a little bit overextended, and that actually kind of dialing back out of the market, paying in some ways less attention, is actually useful. That things are getting too overheated to maybe dial back on the risk, on how much you're reinvesting in things, etc. Doing kind of the opposite. So I think it's kind of an interesting parallel, because people usually think about fear and greed as being the two emotions. So, fearful in the bear market, greedy in the bull market. I'd also argue that there's a flip side of that, which is boredom and exuberance, where boredom is a sign to pay attention, whereas exuberance is a sign that maybe it's actually now time to start stepping away. When things get too exuberant, that's often a signal that you're at or near the top, and stepping away can actually save you from a lot of pain. So just another way of thinking about emotions in markets, and how these cycles in sentiment are not just fear and greed, but also boredom and exuberance that play out over and over again, and basically doing the opposite of what your emotions tells you to do oftentimes can be beneficial. So not financial advice, you should make your own decision of where we are in the market cycle, of what might happen, of how to navigate these markets. But that's one of the things that I'm thinking about right now, and I wanted to just make a video about. So I think it's interesting how repetitive these are, and I don't see as much discussion about this idea of boredom versus exuberance as I do about the more common just kind of fear and greed discussion. All right, so if you like the content, remember to subscribe to the channel, give the video a like, and follow us on Twitter. And also check out polaritydigital.io. Those who subscribe to our Polarity Digital Pro subscription service, only $15 a month currently, get access to all of our data live, so all the data from our models live and more, including the MBI and our other models, our risk models, our trend models, etc., not just for Bitcoin, but also for a number of altcoins. So if you're interested, check it out. Link in the description, polaritydigital.io.